Payments bank and small finance banks. So payment banks are for the low income households or the small businesses. Small finance banks are for the unserved and unbanked region. Now the difference. See, Payments Bank, it's registered under Companies Act 2013 and licensed under Banking Regulation Act of 1949. The same applies for the small finance banks. Then, the minimum capital requirement is 100 crores. When it comes to accepting deposits, only demand deposits are allowed in payment banks. So, what is demand deposits? If people have deposited their money in the bank account and they want it when in need or maybe when they require it, then they can demand the money and they will get it. It has no FDs and NRI deposits. It accepts all the deposits. All right. Now, can it lend loans? For payment bank, it is not. That means it cannot lend loans. Small finance bank, yes, it can lend loans. Only debit card is issued, no credit card. Both can be issued in the case of small finance banks. Talking about SLR and CRR, CRR is applicable for payment banks and also for small finance banks. SLR is equal to 75% of net demand and time liabilities in the case of payment banks, and it's also applicable in small finance banks. Priority sector lending, it can't lend loans, right? Small finance banks, yes, the target is 75%. What is priority sector lending? Now, PSL is reserved for the vulnerable and important sectors like agriculture or MSMEs. All right. So examples are Airtel, India Post Payment Bank, Paytm. For small finance bank, it is Utkarsh, Jan,